Hi, I'm Matt Petrozelli, CEO of Valley National Financial Advisors, and I'm excited to share our Q3 market commentary with you. We're really lucky to have our new Vice President and Head of Investments, William Henderson, joining us. He's been with us for about a month now. I wanted to formally introduce him via video to all of you, and we're excited to give you the Q3 commentary, in addition to some things that we're looking at as we get into the fourth quarter of the year. Bill's been with BlackRock for 26 years before joining us, so he brings a wealth of experience on these large economic trends and issues. Bill, thanks for joining us. Why don't you summarize Q3? Q1, the big drop. Q2, the big rebound. Q3, how do we do?
Sure. Thanks a lot, Matt. And like Matt said, I'm really excited to be here. It's been a pretty fun month. I've met a lot of great people and have had some good opportunities to do some good work so far with Valley National. I'm looking forward to doing a lot more. So talk a little bit about the third quarter and also about the fourth quarter in economic terms. I mean, we've had four pretty big unknowns this year, big events that have hit all in one year, all in 2020, which is really unusual to have this many major things. We had a presidential election, a recession, of course, the global pandemic, and then all this continued unrest and protesting throughout the world, or mostly the United States. We've had single events over the years, but never so many in one year. And that has really impacted the markets. It's impacted the economy. You saw the recession in the first and second quarter. And then in the third quarter, we're seeing projections of the economy coming back at 35%. That's a huge uptick from where we were. And of course, we're starting from a very low bottom. But I'll talk a little bit about the four events sort of independently and how I feel they're impacting the markets and what could happen in the future. So we have the presidential election in a little more than 29 days. That unknown is going to get cleared up. The race, it seems like Biden has an edge, but everything's close to call, and I don't think it's going to be an election that goes beyond election night. I think there'll be a clear victory one way or the other. Right now, Biden has only a 3.8 point lead in the battleground states, and I don't know if that's enough to cover the so-called hidden or silent Trump vote, but I think we'll have a decision one way or another on election day. But between now and then, we're going to continue to get temporary twists and turns, like President Trump getting COVID-19. That was something completely unexpected, along with the unexpected of an election. So the recession, as I said, from the first and second quarter and the third quarter projections are much higher. But how we have dealt with that, Jay Powell that's the chairman of the Fed, has thrown everything at this recession, all the tools in their toolbox, and they've done it significantly faster and larger than they did in the global financial crisis of 2008, which was a really big deal. But this time the Fed learned from that, and they said, we're going to do a lot more, a lot quicker. And I think that has had a big impact on the markets. And Jay Powell has been very transparent and clear about how they're going to deal with the markets and deal with the recession. And the last thing they want to do is shock the market. So I think we're going to have a Fed that is very responsive to economic concerns. Further, we have Nancy Pelosi and Steve Mnuchin working on another stimulus package. That's every day. That's an item. They aren't on and off, on again all weekend. Right now, it looks like anywhere from $1.5 to $2.2 trillion. That could be the stimulus package, and that could be more money in consumers' pockets. And if you look at consumer savings right now, it's actually at a record high, $20 trillion in cash, savings, and money market accounts. That's $20 trillion sitting on the sidelines. And remember, the consumer makes up about 65% of the economy. So that's a large piece of the economy that's sitting there waiting for something to do. And I think that is a large part of what we're going to see in the fourth quarter and into 2021. What happens in the election, what results are we going to see, and where the consumer goes from there. The COVID-19 pandemic, that's been a crazy unknown that we've happened. It's truly a black swan event. That's an event so rare that you're not able to predict it in financial markets. So no one was able to predict or believe that the entire world would shut down for a period of months at a time. This is not something that you can predict. And I think going forward, it's going to continue to throw curveballs at the market. Right now, there's several vaccines in this testing phase. That is a record. If we could have a vaccine within a year of the pandemic, that would be the average vaccine takes about 4 years. So we're well ahead of that. A solution to the pandemic could have a big impact on the markets, or if they continue to fizzle with the vaccine and nothing happens, we continue to have a drag on the market. So that's one that's not easily explained or easily planned for. I think the unrest and protests that we've seen, they have rattled the markets at times, but I believe that the election is going to have an impact on that one way or another. I'm not sure how, but I think the election will help with that. So Matt, I'll move to the economy a little bit, if that's okay.
Go ahead.
After the election, we're going to see Q4, which would be impacted by a stimulus package and more likely the results of the election. A Biden election, you could see concerns about higher taxes, greater regulation, renewed war on fossil fuels. That's an industry that's already taken it on the chin this year with oil at the $39 a barrel. That has really been hit hard, and a Biden election and a Biden win will just really put the nail in the coffin potentially in the entire fossil fuel industry, which employs a lot of people. So that's one example of a concern there. A Trump win would mean continued deregulation, more favorable tax policies for individuals and corporations, all of which could lead to a little bit stronger GDP. Not sure the outcome, but both of those have some concern. I believe the impact of the COVID-19 is going to really show how the world as a whole has reacted to the pandemic. And going into 2021, that's going to continue to have an impact and a concern.
Yeah, thanks, Bill. That's a great summary. One point that I think we should tell the people watching this video is I think Q4, given all those four big uncertainties that you're talking about, how does volatility play into that? I think that's the big scare for everybody when things get really, really choppy, both on the upside and the downside. How should investors play it?
Yeah, I mean, we're not market timers at Valley National, and personally, I don't believe that is a method to proper investing. The better way is long-term investing with a sound financial plan that you believe really understands the risk of your portfolio. I like to believe myself to be a risk manager, not necessarily a performance-based, only alpha generation. Beta is more important, understanding the risk of your portfolio. If you look at 2020, for example, there have been 7 days where the market has been, the S&P 500 has been up or down greater than 5%. So if you were out of the market those 7 days, one way or the other, your performance for the year would be severely impacted. But on a year-to-date basis, the S&P is up 3.6%. So a positive return if you just stayed in the market, which, as I said, long-term investing with a sound financial plan, I think is a much better road to financial success than trying to time the market. I think market timers, it's tough to pick the days when it's down, and it's just as tough to pick the days when it's going to be up.
Great. So the message to our clients watching this video is to stay the course, evaluate their risk tolerance as we go through these events, and make sure they're staying true to their financial plan and financial goals. Well said. Any closing remarks, Bill, before we turn off the camera?
No, I think that's it, Matt. You summed it up well. We have a 10-year Treasury at 73 basis points, and the yield on the S&P is about 1.8. It's even more important to make sure that you have a sound financial plan and a good portfolio to meet your long-term needs.
Great. Well, thanks, Bill. Great to have you on your first quarterly call video. Hopefully we can do these in person soon, but until then, our objective is to keep our employees and clients as safe as possible, so we'll continue to do it in a remote fashion. Thanks for your time. Everyone out there, have a great day and be safe.
Thank you, Matt.